Welcome back, traders. This is Pips of Africa. I'm back again with another video. So now there are several things that I want to talk about with you guys, how to become profitable, the secret of becoming profitable, right? I'm not going to talk about the chart anymore, right? You're going to see that stuff on the next video, right? Because the other videos I've already uploaded the another video for mitigation and breaker block. So on this one here, I'm going to be showing you how to become profitable. Because becoming profitable, it doesn't mean that we have to win, $50 a day, $100 a day. Tomorrow you're winning $200 a day. And then you don't know how much you need a day. How much satisfies you a day, right? The first thing that you must have, I'm going to write down these things. The first thing that you need to have, this one. The first thing that you need to have, the bigger pen. Okay, so the first thing that you need to have, the first one is you need to be disciplined. You need to be disciplined. You need to be disciplined. Number two, you need to have a daily target. Daily target. This is the secret, guys. You need to have the daily target. The first one, which is very, very important. I'm going to define all of these things. The first one, these are the things that you need to be profitable, to become profitable. You can't be profitable because some of you are already profitable, but they can't see that because they are gamblers. They are gambling. You can't be a smart man trader and at the same time you are gambling. If you are a smart man trader, just act like that. Act as one. You can't be gambling if you are trading this concept, the smart money concept, because some of you go ahead and take signals from some people's there. You join Telegram groups because you want to receive signals. That's not okay. That's not the right, traders. Because in this channel, here, I'm not going to give you signals. I want to give you the information that will make you become profitable, like everyone in the world, like each and every trader that is profitable today, like myself. So now these are the things that you need to apply. The first one I said, it is discipline. The second one, daily target. You must have your daily target. You can't just trade and then not knowing how much you need to have in your account a day, right? Number three, money management. Money management. I'm going to explain all these things. Money management, because I'm done talking about strategies now. Because giving you a strategy without having these things, it's just useless. It is useless to know the strategy, but you don't have a discipline, you don't have daily target, you don't know anything about money management. You're going to continuously lose the money. You're going to lose the money, but you need to have all these things. The first one, discipline. You have to have a daily target. You need to know how to protect your money, the money management, how to manage your funds. Because it is very simple to win the money from the market. But the biggest issue is this one, is to maintain that profit that we have won in the market. Know how to protect your money, right? So that your money will remain in your account, right? Number four, follow your strategy. Follow the rules of your strategy. Number five. So if I say follow the rules of your strategy, we are trading order blocks, mitigation block, propulsion blocks, vacuum block, all those things that we are trading as smart man traders. We're following the footprints of the big banks, of the big players in this game, right? So if the rule says, let's say you see the daily order block, right? Let's say you see the daily order block, but you know very well that the rule says if the price is currently inside the higher time frames or the blocks of the block, you must wait for the break of market structure on the lower time frames. All right. So let's say the price is in between or is inside the 1 hour order block, bullish order block, meaning you must go down to 5-minute time frame and all other time frames. What do you want there? The strategy says you must wait for the break of market structure according to the lower time frames, smaller time frames. You'll find that some of you guys, you don't even look at smaller time frames. You don't even wait for the break of market structure on the smaller time frames. You're just taking the trades without getting the break of market structure. That is very wrong. It will make you not become profitable in this game because remember, it is us versus the big players, the big banks, the market makers, those who are manipulating us. They do not want you to make money in this market. They want you to lose because they take money from us. They get money from us. So they can't let us win. Where are they going to get money if they let us win? They'll make sure that they make us lose money every day. Each and every trader is profitable out there. They are disciplined. They are profitable because of the discipline that they have. If you are disciplined, let's say you take the trade based on the break of market structures or the liquidity grab after the liquidity has been grabbed. Let's say you keep those rules. One of my rules, I wait for the break of market structure on the smaller time frames, and also if not break of market structure, I want to see the liquidity being grabbed or being taken out, right? On the smaller time frames. Because I know that after the market have grabbed the liquidity, it will shoot to the downside. Once the market grabs the liquidity, that's a sign that the market wants to go higher for the very long time, or going down for the very long time. If the market grabs liquidity, because if the market wants to go bullish for a long time, to start by creating a lot of liquidity, a pool of liquidity, then it will grab it. After grabbing the liquidity, it will go push it to the upside, to the opposite side. Because the retail traders, the supporting, because I'm also a retail trader, because I'm not trading for the banks. But the difference between me and the retail traders is that I don't trade like retail traders. I don't trade support and resistance. I don't trade indicators, right? That is the difference between me and them. That is why I'm a smart man trader. But not that I'm not a retail trader. So let me not dwell much on that one. So I'm here to give you the tips to become profitable, because that is what we all want in this game. We don't want to become millionaires in one day, but we want to grow up like gradually, to slowly grow up. There's no rush in this game. If you are rushing, these guys, they are going to take your money. The broker will be happy to have you. The broker is supposed to be paying you by now, to ban you, because you are winning every day. So remain true to your strategy. Do not break even a single rule, right? Let's go to number 5. All right, on number 5, this one is a little bit deep. This one is a little bit deep. So on number 5, all right, choose, all right, so you have to move your stop loss. Do not move your stop loss, right? Okay, I have to put this point like this. Keep your stop loss. Keep stop loss in one area. Or move it into profit. Right. So the first one, I think I'm done now. The first one is a discipline. Number 2, daily target. Number 3, money management. Number 4, follow the rules of your strategy. Number 5, keep your stop loss in one area or move it into profit. So what I'm trying to say is this. Let me try to clarify this one of number. Do it. Okay, so let me focus on this one. Let's say here you took your trade here. Let's say you took the trade here. And then your stop loss is below. Your stop loss is below. I'm trying to explain number 5. Your stop loss is here, 10 pips stop loss, right? And then you see the market running like this. You see the market running like this. Running like this. Hello. Hello. And then your stop loss is down there. Your stop loss is down here. So what to do in this case? I'm going to show you the exact thing that you need to do. So what to do in this case, you need to actually move your, let me just use a different color. You need to, all right. You see your stop loss is currently here. You have entered in this, on this point here, right? So what I'm trying to say is that do not move your stop loss from here to here. Right? Do not move your stop loss from here to here. Just do it like this. And then try to bring it back. Do not move it to here. I'm talking about point number 5. Keep your stop loss in one area. If your stop loss is here, it must remain there, right? So just because you see, because some people are moving their stop loss, sometimes ending up having a huge stop loss, because when they see the price coming back like this, they start to panic. When they see the price coming back like this, right? You say the stop loss was still here. They say the stop loss was still here. And then when they see the market coming back down near their stop loss, they'll start moving their stop loss. They'll start moving your stop loss to here, because they see the price approaching their stop loss. They will move their stop loss to here. Then the price will do this. The price will continue coming down here, and then finally hit this stop loss. Remember, your stop loss was here, right? So you were risking small here. The risk was too small here. The risk was too small here. You can see for yourself that you were risking small. The risk was reasonable here. Then you also moved your stop loss into a huge profit, to a huge low. The stop loss became huge because you saw the price coming, approaching your stop loss. Your first stop loss was here. Then you moved it to here. Then the price continued going down, and then it hit the second stop loss that you moved, right? So that is why I say keep your stop loss in one area. Keep it here. Keep it here. Keep it here, guys. Keep it here. Do not move your stop loss into bigger loss. Don't do that. The second thing that I want to talk about here is this: that if once you see the price moving up like this, move your stop loss. Move your stop loss into profit. Below this low here. Below this low. You move your stop loss just a little bit. You don't push your stop loss. Don't put your stop loss here. Don't do that. Right. Your stop loss must be moved slightly. move it into a smaller profit. So that if the price decides to come back, it will take you out into profit, right? That is how you must play the game of stop loss. All right. I want to talk about another example. Let's say on this one, we were on the sell. You saw that the price was creating something like this: up, down, up, down, up, down, up, down, up. Here, you know this area. What is this area? You know it. Then the price came back for this one. Then it dropped to the downside. Your stop loss is above here. Your stop loss is above here. And then when you see the price coming back again, when you see the price coming back, approaching this area, right? Approaching this area, you are now trying to move your stop loss now, right? Right. You're going to be moving. Some people are moving their stop losses now. You're going to be putting it here. You're now putting a stop loss here. Then the price will go ahead, move like this, move like this, move like, then take you out here. The stop loss was too small here. It was reasonable here, right? And then you moved it to here. What do you think is happening? Are you growing as a trader? You are not growing. You're not going to grow until you change this mentality, this mindset of this tendency of keep on moving your stop loss into a bigger loss, right? You can't be having a huge stop loss like this one. So let me just talk about another point. Right. So now I want to talk about this one. So I just want to talk about this one now. So the stop loss, how do you then put it into profit? Do not move your stop loss into bigger loss, but rather put it into profit while the price is running like this. Price going up, it's going down, it's going up, it's going down, it's going up. And then here there was, let's say here there was an order block, right? They said there was an order block somewhere here. The order block was here, right? Then the price came back then. The price came back in this manner, like this. It tapped inside the order block here. Then it went to the upside like this, right? And then you have entered somewhere here. You have entered here. And then the stop loss is somewhere here. The stop loss is below this low here. It's below here, right? The stop loss is below here. And then let me show you how to move your stop loss into profit. You move it because you are already in profit because you bought here. The price is going up. So now this is what you must do. You must then move your stop loss. You put it here into a smaller profit here. You put it here. You move it from loss position and then you put it into profit. So that when the market decides to come back like this, it will hit you into profit. It will take you out in profit. At least that is how you move your profit, your stop loss. You can't keep your stop loss in this area while the market is still running, right? Because the market will go down and hit you there. The rule says, while I'm still in the profit, while the profit is still running, I have to move my stop loss into profit, into a smaller profit. Let me show you this once again. You can't move your, let's say the price is here, go up here, like this, here, here. If you're moving your stop loss, you can't put your stop loss here. You can't place your stop loss below this low here. It is wrong like that because there might be liquidity here. You can't put your stop loss there. You can't do that. You can't place your stop loss here. It is wrong because the price can easily come back down and take you out. The price can easily come back like this, up and take you out here, right here. It is not wrong, right? Don't get me wrong, but you have to put your stop loss here. After checking that there's no order block underneath here, then you can put your stop loss above this zone here. Do not rush to place your stop loss here. You do that until you meet your daily target. Because in some setups, you see these things. I'm going to be done right now. Right. So you see these things. You know that the market, this is the order block. The price went like this, and then it went up, creating this order block here, right? So when the price comes back here, right? When the price comes back like this, it will tap inside an order block. After doing that, it will push to the upside. So you can't be expecting the market to really come back below this low here. Because if you do that, that will cause you to move your stop loss maybe around this point here. So after doing that, so you can't be putting your stop loss around this point here. Let's say the market, before I do this, let me just let the market run. Let's say the market came back to this daily order block. We are on the smaller time frames, and the market is currently running like this. So if you buy here, you can move your stop loss here, right? You can't do that because you know that because this one is a daily order block. This one is what is a daily order block. This one here. So you must leave your stop loss into a smaller profit, maybe down here, not up here, right? So you must know, you must learn how to move your stop loss. But if you don't trust this order block, you can then move your stop loss here. You can move your stop loss here, so the market won't take you out. So the market won't take you out here and then go up like this, right? Those are the scenarios that we are trying to avoid. But you see that if your stop loss remained here, you are going to be in the profit, in the good profit. You're going to make a good profit. So that's how you move your stop loss. So on the next point, I'm going to talk about the point number 4. Point number 4. But point number 4, I've already covered point number 4. All right. So if the strategy says you wait for the break of market structure and then the liquidity grab, and then you look for the RSI, the volume. So you must keep all those rules. If you go back and check my videos about order blocks, how to trade order blocks, those are the rules that you must keep in place. You must not violate them. That's why I said follow rules of your strategy. Number 3, I've already talked about that one in the form of stop loss, money management. Number 2, the daily target, right? The daily target. Let's say you have a day. You want to have a day. You want to have a day. You want to have okay. You want to make already. When you want to make that here, but here a day you want to make how much? You want to make $80, or you want to make $50. Let me just say $50. $50. You want to make $50 a day. Remember. So some people are like this. This is the daily target. I'm explaining the issue of number 2. You want to make $50. Some people will do this. They'll make $60 already. They will win $60 in just 30 minutes. They will open 4 trades and then make that $60. And then when they see many setups, they will try to overtrade now because they see so many trades. They'll become greedy, right? Once you meet your daily target of $50, you can trade with the $10. I'm trying to give you an example. Because your daily target is $50, if you make $60, you can use the $10 to continue trading. Your $10 to continue taking another trade. Okay, let me just do it like this. you must use $10 to continue taking another trade. Right. So if let's say your daily target is $50, then you have already made $60 already. So use the extra $10 to continue trading with, right? You must use the extra $10 to continue trading with. You can't be continuing using the $60 and then you trade with it all, right? Protect your daily target. If you have met, or if you have already met your daily target of $50, you can use the extra $10 to continue taking another trade. Because it's very painful to quit the market, to leave the market early in the day. Let's say you make the $50 early in the morning. That doesn't mean that you must not continue trading. But if you want to continue trading, you must use the extra money that is above $50. The extra $10 if you want $60 already. But if you are disciplined, once you meet your daily target, even if it's in the morning, you must stop trading. That is how you will become profitable in this game. Because if you overtrade, you may end up losing that $60, the whole $60 easily. If you overtrade, know your daily target, be disciplined. Know your daily target and be disciplined. Once you win above $50, just save the $50 and trade with the extra profit, right? Which is $10 in this example, right? That's what is very important. I want to talk about this point once again. I'll delete these ones. Okay. Here's another thing that you need to know. Right? Because I was talking about the daily target. So the second thing that you need to understand, when you place a trade, let's say you have $10 account. Your account is $10. I'm just making an example. The $10. So what we have to do, we have to use the minimum lot, which is 0.01. That is the lot size that is suitable for this account. There's no another lot size that is suitable for $10 account. Even if it's $20, you must use 0.01, the minimum lot. Do not be greedy. That is what I'm trying to emphasize. Because even if you watch all my videos, you apply everything that I said, as long as you are still greedy, as long as you still not having the daily target, you will keep on losing money until she just comes back. Until she just comes back. If you over trading, the lot size that is suitable for $10 account or any other smaller account is the minimum lot size, which is 0.01. Number two, guys, you need to calculate. You need to calculate your stop loss. Your stop loss. You need to always calculate your stop loss. Because some people, they just place a stop loss and they just randomly place a stop loss. They do not know how much they lose, how much they can lose if the price goes against them. You must always calculate. You must know how much you are risking, how much you are willing to make. Right. How much you are risking, how much you are willing to make. Let me make an example of that. Let's say you are here. Let's say the price is here. Let's say you take a trade here. Right? So let me change the color. Let's say your trade is here. Your stop loss is here, as you see the red line there. Then your target is here. Right. Let's say then the price, it goes against you. And then the account size of yours is $10. How much will you lose? How much you are going to lose? How much are you going to lose here? If the price goes against you? Let's say it's 5 pips stop loss. You must calculate how much you are going to lose based on the size of your stop loss. If you're using 0.01, calculate everything. You must know how to calculate the stop loss and then the amount that you're going to pay according to your TP, according to your take profit. Let's say the price rallies up like this, hit your TP. You must know how much you are going to make. Let's say the price goes against you. You must know how much you are going to lose. That is what I'm trying to explain to you guys. Just go ahead and focus on another points. All right. So another point is this one. One, what you have to know is this. But these ones are in the form of money management. Because I talked about the daily target where I made an example of $50. But here I'm just explaining because money management is very, very important. You are not the one who's going to make money here in the market. Let the price, let the profit run, let the trade run. Your duty is to protect it, is to protect your account. That's the only thing that you're going to do here. You must make sure that you place your trade in the correct area, right? In the correct area, right? And also you place your stop loss in the using after calculating the amount that you are willing to risk. The size of a stop loss, it needs to be calculated. All right. So now, after doing that, what you need to know is this. Know where to place your stop loss. Know where to place your stop loss. To place your stop loss. That is another point. Know where to place your stop loss. Let me make an example of that. Let's say now we have the price moving like this, price moving like this, like this, like this, like this, like this, creating liquidity, and then now move like this, move up like this, leaving an order block somewhere here, moving an order block somewhere here. When you go to smaller time frames, let's say this one is H1. Let's say this one is an H1 time frame, right? When you go to a smaller time frame, when you go to smaller time frames, you want to place a trade here, and then you're on a smaller time frames. This is the order block of the daily this is the hourly order block, and then on the smaller time frames, you can't place your stop loss inside 1 hour order block, even if the price is now up here. You can't put your stop loss here, right? Your stop loss must be below the higher time frame order block to be safe, and that stop loss is calculated. So the second thing that you need to do on a smaller time frame, you want to see the price grabbing liquidity. If the price does this, and then it grabbed liquidity on the smaller time frames, then it went up, your stop loss must be here on this low of the liquidity grab, right? You wait for the market to come back testing this zone and then goes up. This way you take your trade, you put your stop loss below here. That is how you must trade the market according to smaller time frames. So this is why this is how you know where to place your stop loss. So guys, just drop the comment below. So the discipline, being disciplined, the discipline, how to become disciplined. Being disciplined, it means that you do not violate any of the rules. If you are disciplined, you follow all your rules. Never ever violate even a single rule. Just follow all your rules. If a rule says you wait for the Birkhoff market structure before taking the trade, and then you move your stop loss slightly into a smaller profit, those are your rules that you have set for yourself. Being disciplined, it means that you do not overtrade. Once you meet your target, you stop trading. That is being disciplined. We have a one way of moving your stop loss, right? You don't change it. You're right. Being disciplined, you keep all your rules. All right. So that's all for today, but I'll come back with another topic because I wanted to help everyone to grow in this market. But thank you so much. Just enjoy the video. Keep on following the channel and subscribe, like, share the videos to everyone. So thank you so much. God bless you. People of Africa is now signing out. Peace and goodbye.